Hello and welcome to the Wendell Effect. My name is Brandon Wendell. I'll be your guide with my view of the markets for this week. So, just a reminder, we are not broker-dealers or investment advisors. We're going to take a look at this information from an educational standpoint only, not telling you to buy or hold in particular securities. We are not saying that previous history is any indication of future results, and we're not subject to trading restrictions, so we can have a position of security initiate one at any time. So, that being said, stay in touch with me. Please shoot me emails. I would love to respond to you and make sure I include new things in the video as well, kind of tailor towards what you want. So please email me at brandonwendell.cmt@gmail.com. You can hit me up on Twitter at TraderBdub, and you can also search for us, obviously, on the Wendell Effect here on YouTube. So for today, we're going to kick it off with our usual, the equity index futures. Then we're going to move into energy futures, take a look at sector analysis, and wrap it up with a little bit of crypto as well, because that's been requested as well. So anyway, jumping right in, for the week of November 6th, taking a look at the equity index analysis for the futures on the ES. Sorry, my phone's going a little crazy there this morning. Anyway, you can see that we've been retracing a little bit. We retraced our last impulse 50% and then obviously started selling off again. We are still in a bear market. Don't get fooled thinking, oh, we've seen the bottom. I don't believe we have yet. I think we're going to continue to push down in these markets and, trade accordingly. We're in a bear market until the market tells us we're not. So looking at the daily chart, you can see that it's interesting. We had a rally, couldn't get above 60, and we even had a little divergence, so we dropped down. But as we drop down right now, we put in a low without going below 40, and that was at a 50% retracement of our upswing. So that's telling me that we might get a little bit of a sideways move this week, believe it or not. A little bit of choppiness going on here because as of right now, we're not able to get back below 40 to continue our new lows. So look for a little bit of choppiness, good volatility, good intraday trading, not so good for the swing trades though. And at the 4-hour time frame, you can see that we started dropping but lost a lot of that bearish momentum before we even hit demand at 36.64. So we are seeing a little bit of sideways potential in these markets. We can't really go very far to the upside. We can't really go very far to the downside. So we're likely just to get squeezed out a bit sideways. You can see that we lost our bullish momentum. The NASDAQ was one of the leaders to the upside. It made lower high and lower low and is now leading to the downside. The Dow is what's trying to drag us up still. It's the last index really kind of fighting to go higher, and it's pulling everything sideways rather than going up with it. As you can see, the NASDAQ is just kind of flat. I mean, it's up overall since our lows, but not by much. So jumping into the NASDAQ, you can see how weak it is here on the weekly chart. We tried to make a new high, couldn't do that. We were way below 40 on that RSI, so plenty of bearishness there. As you can see, not very good. And moving into the daily chart, same thing. We have lower highs, lower lows. We failed to get above 60. We just barely peaked below 40. So this is telling me the NASDAQ actually wants to go down, not sideways like what the ES was showing us. So a lot more bearishness here in the NASDAQ than we see in the other markets. And dropping down the 4-hour chart, basically we see a very bearish picture here. We had a bunch of highs that were well below 60, well below 60. We're in bearish territory because we went below 40. A little bit of positive divergence, so we pulled back, and we're testing this supply zone 11,000. Again, the Dow is a bit strong, so if it can pull back to the upside, we may rally, but we have a lot of overhead supply anyway. It might even get stalled out right here at about 11,300 before we get to 11,005. And really, the NASDAQ wants to go down. It's just a matter of whether the Dow finds weakness. So looking at the Dow on the weekly chart, you can see we failed to get above 60. Didn't quite test this supply. We tested this one and broke, obviously. Lots of bullish activity. But, even though we pulled back, notice how much bullishness we still have in the Dow compared to the other indices. There's a lot of bottom tail there. That's buying pressure. So the Dow still wants to go higher, and that's what's pulling everything upwards. It's the only index that's really showing that bullish activity. You can see we pulled back 78% of our previous impulse down, and we're still trying to go higher. So the key will be, as we come back up to this high, do we have more momentum or less? If we have less momentum than we had on this previous peak, then we will fail to make a new high, and we should drop down. And we'll drop down to 30,711. If we don't, if we do move up and we have more momentum, then expect a breakout and possibly a little bit of stalling out at 34,000. before we can potentially go higher. And again, that's going to cause the other markets to go a bit sideways. On the 4-hour chart, let's see, that was the daily. Yeah, it's a 4-hour chart. We have bullishness and bearishness. There's really not much going on here. This is kind of suggesting sideways movement as we retrace 38% of our most recent impulse. So I don't really have a clear picture of what's likely to happen here either. It's kind of weird. But we'll see what happens with the overall markets. Again, kind of keeping it open and see if the market can go higher with the Dow or lower with the NASDAQ. And the Russell still shows a lot of weakness. Can't get above 60, lots of lower highs, lots of bearishness here. Although, again, like the Dow had a little bit of bullish pressure at the end of the week. Looking at the daily, actually it was the beginning of the week. Oh, no, it was at the very end right there. On Friday, we pulled back just a little bit, Thursday and Friday. So we made up for Wednesday's drop. That was the Fed announcement, by the way. And, yeah, not really seeing a whole lot here. We did get above 60 on this pullback, so we're likely to continue to go up on the daily chart. And we might end up, if the Dow pulls us higher, the Russell should rally up towards 1888. And if the NASDAQ pulls us down, then obviously this will go lower. Looking at the 4-hour chart, we have more bullish momentum creeping in because we're losing our bearishness here. And it's just, we'll have to see. Time will tell if we can break this little supply here at about 1830 and go higher. Again, if the Dow goes up, expect this to go up with it. If the Dow fails and the NASDAQ prevails, then we're likely to drop down to a retest. And by the way, this is a tested demand zone, so it won't hold very well at 1704. It would just slow down price. So, turning our attention to the energy markets, we're going to start off on crude oil on the weekly chart. We are continuing our impulses to the upside. It looks like we're getting pretty bullish here in this move up and working our way back up towards 100, basically. We got the momentum building up as well. On the daily chart, we are going to run into a little bit of overhead supply at 94.46 very, very soon, but you can see momentum has gone above 60, which means supply is a lie. This is only going to slow us down, not turn prices around. So I'm not looking to go short at these zones. These are more like targets for longs and profit-taking areas. That's all. Looking at the 4-hour chart, if we can get a pullback to 88.59, I'm looking to buy. You know, we didn't really form a good zone right here, but we could bounce off the 90 area as well. We reached target 1. We're going to easily get to that target 2, I believe, this week. But we'll have to have a little pullback first. And that'll be our chance to buy. So look for the pullbacks as a buying opportunity. Nat gas on the weekly chart, we bounced off this weekly demand, but we were well below 40 when we did it, so I expected to have more bearish pressure. I was a little surprised to see we continued the retracement here to 23.6%, so we're actually still seeing more bullish pressure coming in. It'll be interesting to see if we can get above 50 and actually move up to the next level, 7066. Looking at the daily time frame, it doesn't look like that's going to happen because we do have overhead supply here at 6.766. If we hit that supply and we're still below 60 on the RSI, then we should continue to move back down. So it looks as though this might be a small retracement before we push down more. Remember, the weekly didn't hold above 40 on the RSI, so it's still somewhat bearish. On the 4-hour time frame, price is consolidating a little bit in an upward manner. So really, this is more like an ascending wedge, which is actually a bearish formation. It's continuation usually. So we have our impulse down, correction up, getting ready to impulse down again. Just a matter of where it'll start. And we do have this supply at about 6.7 like we had with the Fibonacci retracements on the higher time frame. So look for that as a possible stalling point. We are above 60, so we would need some sort of negative divergence to really signal the drop. On to gasoline, we are pulling back as well, possibly impulsing up again after our correction down. Overhead target is 3.12, so we'll see if we can get there. Probably not this week, obviously. But we are at supply, and we did get a little more momentum, so we're not really going to bounce away from that area. I think we're probably just going to go a little sideways before pressing through and trying to work our way towards the 3 level. 3.0. I think that's likely where we're going to be heading here. On the 4-hour chart, you can see we have really more momentum than we had before. So again, this is just a correction, and we should go through that daily supply. It'll be slow and choppy, but overall the movement should be to the upside this week. Heating oil, don't really have much on the weekly chart. We did make a new high compared to previous highs. We are above 60, so this is legit. We're moving up on heating oil. We're also coming into the high season for demand for heating oil as the northern hemisphere cools down as well. Anyway, looking at heating oil on the daily chart, we've almost reached our first target, an extension of the previous impulse. And it does look like, we might get a small pullback, but not by much, because there's plenty of bullish momentum here. And we should be able to continue up to the next target. 4-hour chart tested demand already, so this doesn't qualify as a demand zone, unfortunately, but we'll see if we get a small retracement. We might get that before we rally. But overall, very bullish on heating oil, looking for it to continue to move to the upside. Now we're going to take a look at the stock market again and move into sector performance to get an idea of what might be happening this week in our various sectors. You can see over the last 6 months, we still had energy as our leading component. Everything else is starting to go a little more negative as, again, the bear market is taking over. Looking at the last week, you can see that we had a little bit of a gain in energy as well as materials and just a little bit on the industrials. Everything else was pretty much down. So we'll see if we get a little more choppiness again. The past month's performance, you saw obviously earnings driven. We had a bunch of big red out there for some of the big names. And a lot of green, again, energy and industrials, as I was mentioning. The past week was a little bit more bearish as earnings were a bit disappointing. There's only a few shining stars on the green side here, a little bit in energy, of course, and the industrials, as I was mentioning, and a little bit of diversified banks, believe it or not. But for the most part, you got this big red swath going across the top there. So looking at the sectors, first we'll start off with XLY, consumer discretionary. This is just choppy, and we keep peaking below 40 as we come down. So this is eventually going to break down. It hasn't made it to its move yet, the first target of 132, but it looks like we should be able to get that this week. This is kind of a dead sector. It's not one that should be purchased really during this kind of market environment where the market is a bit choppy and a little bit bearish. Looking at BKNG, unfortunately, we started to move down with the earnings and then pulled right back up into our zone, unfortunately, but we do have a lot less momentum than we had before. So, on our previous moves into the zone, we were above 60. Notice now we're not. So this may be legit. I would look for an entry on the short if we break below the 1849, as a kind of confirmation entry, and then look for it to go to target number 1 of 1621. And it looks like it's getting ready to go. XLC, the communication sector, worked out really well. Hopefully you got in on that move into our supply. You notice we never went above 60 for the close, and it dropped. It's already hit target 1. It's well on its way to target 2. We may get a retracement. If we do, there's another new shorting opportunity at 47.90 to 49.15. So wait for that possible pullback before you go short again. Looking at the technology sector, this looks a little bit bearish. However, we didn't go below 40 on this pullback. So we're not continuing the bearish trend yet. We may go a little bit sideways. We could get a bounce here in technology this week. It looked like it was going to continue down, but again, you got that bullish pressure on that wick, and we couldn't get below 40. So that's actually a little bit bullish. I think we're going to choppy this week and just kind of go sideways. The industrials, which was a bullish move in the market, is not getting more momentum. So that bullish move that we saw this week where we went up a little bit on the industrials, I think it's done. And we could go either a bit sideways or a little bit to the downside. As I was mentioning, we didn't have as much momentum on this rally that we just recently got. Now, if we do gap up or move up and we break out compared to the prior highs, then yes, we will continue to go higher. And you probably wanted to use a Fibonacci extension from this point to the highs and then the correction to project where it's going to go. So as a matter of fact, I can do that. Take it out to my chart, XLI. And we'll go to the daily time frame, and this is what I was talking about right here. If we get that bullish momentum where we get some new highs, I would actually look at the correction start about here. That was our peak before we started dropping. Maybe this one. And then you got a target overhead at basically a little over 100, 101. So that's what I'm looking at. If, again, we can get more momentum out of this as we break out to a new high. So moving on to the materials, building materials. You can see we pulled back a little bit, tried to rally, but I guess we got a little more momentum than we did before. We still aren't above 60, so keep an eye on that. It could be a false break. If we end up breaking the low of that candle and going down, then we will continue to make some new lows this week. If we break the high of that candle, we need to have a momentum that's higher, and that'll be legitimate as we continue to push up, probably up to the 79 level. So keep an eye on that candle. It's very important to see which way we break. On the energy, I've been keeping this trend line. It's been crazy. We used the trend line as a demand zone and then a little bit of resistance right here. Now support again. So we're just kind of riding this trend to the upside. However, you notice we have a lot less momentum on this current candle than we did. That was Friday's candle compared to Tuesday's candle. So that's a divergence warning that we're losing momentum. Of course, we had our target of 93.17. That was the extension of the previous impulse, basically duplicated. And I would expect a little bit of a pullback, going on this week. I don't know if we're going to drop dramatically because we're still pretty bullish, but we should go on the opposite side of that trend line and maybe finish a little bit higher towards the end of the week, right around 90, I think. So that means it's a little bit choppy here. XLP, we are on a correction, moved down about 50%, but we look like on the staples, we're going to continue to push higher. Once again, when we reach this high of 73.30, we need to be making a new high on the RSI. If we fail to do that, then expect prices to fall down again. If we can make more momentum, expect a breakout. The XLV healthcare also corrected down, trying to make a move back up. Same picture here. Again, if you can break out with more momentum, it's legitimate. If it doesn't, if we have less momentum, expect a correction towards the end of the week. The utilities, same thing, but this is a weaker rally. You notice we couldn't get above 60 on this rally, right? We bounced off a weekly demand, which you would have thought would have caused us to really bounce strongly, but it hasn't. And a lot of that is interest rates. These utilities operate on high leverage. They issue a lot of debt, corporate debt, bonds, basically. And with the interest rates going up, that prevents them from issuing more and gaining more money for operations. So that's why we're getting a little choppy here. I think this is getting ready to drop once again, to be honest with you. It doesn't look like it's going to get much more than where we're at right here on this correction before we impulse it down again. On the financials, we are fighting to get back up towards that 35 level. But again, that's a good supply zone at 35. Lots of selling pressure began there. So that'll be the terminus of this week if we can even get that high. Same picture. We got the highs that we were making earlier this week or last week, and we need more momentum to be able to break to new highs. If we don't have more momentum, we'll fail. Real estate did a small correction, stayed below 60, so I think this is all we're getting out of this correction. Remember, we had impulse down, correction up to 38.2%. It looks like we're just a little choppy before we start to head a bit lower. The fact that we didn't make a low below 40 leads me to believe we might just get stuck between this 35 and 37 level, honestly. Could just go a bit sideways this week. I was looking at Welltower as one of the real estate plays as a shorting opportunity. And the same thing that happened with the sector that happened here. Welltower is going sideways. Looks like we got earnings coming up at the beginning of the week, so that'll obviously could cause a rally into supply. If that happens, that'll be a good shorting opportunity. If we gap up into supply off those earnings, if we don't, it depends on how we come into the zone. If we come in slowly, we could break through. If we come in quickly, we'll probably bounce and head down. So that was it. As far as some of the other trade ideas, Microsoft made it into demand, but we have too much bearish momentum. Do not get long. Demand will not stand if the RSI is below 40 right there. So it looks like we might get a small bounce, but we do have overhead supply really right here. Rally, base, and drop. So there might be a shorting opportunity, believe it or not, around this 230 level if we do rally there. But I don't see us heading up to the target, so don't try to take that long. Skyworks Solutions, this normally goes down 80% of the time. You can see a pretty good drop of about 6.5%. For the next couple of weeks here, from the 5th of November to 19th of November, we usually drop pretty quickly. So keep an eye out for Skyworks. Now, we got to find a good shorting opportunity. The only one I found on the daily chart is way up here, 92.22 to 95.27. If we can rally to that point, we might be able to short, targeting 74.90, then 64.19. I believe that was it for this stock. So I'm going to move into crypto for our week of November 6th. And looking at crypto, we had a pretty good week last week. You see, for the entire week, almost everything is green. We have a few standouts, but not a whole lot. Anyway, looking at Bitcoin, we are bullish, making higher lows and higher highs on the daily chart, trying to break some more momentum. This may become a demand zone here at 20,000 as well. We have drop, base, rally. We still need one more candle for follow-through, but it does look pretty good. As far as Bitcoin goes, there's no overhead supply till 23,000, so we could move up a little more. There may be a buy opportunity on the 4-hour chart. You can see we hit one target already from a previous impulse and correction, and we're stalling out. So if we pull back to 20,654 to 404, that could be a buy opportunity, and then target 22,380 is our target to the upside. Onto Ethereum, we are in a negative divergence here on a daily chart where we try to make another high, but we did with a lot less momentum. I'm expecting a pullback here. I don't know if it'll pull back all the way to 1369. It's 1300, not 1000, but 1369. It could. That's our next demand zone, but we might just get a small pullback before rallying. Unfortunately, there's a lot of overhead supply here at 1716 and 1820. So looking at the 4-hour chart, if you're looking for a pullback and a buy opportunity, 1548 would be your entry right here. We have a little rally-based rally demand at 1522 to 1548, and then take it to the upside again. Really, 1716 is at overhead supply, which is on the daily chart, is before you hit some of these targets. So I would say if you go long here, then you probably want to target 1684 and then the 1716 area. Looking at XRP, we are kind of sandwiched sideways. XRP, where was it? We got a little bit of overhead supply. We came close to it, so we might have wiped out a little bit of the selling pressure. Can't really short there anyway because we are too high with momentum. So it looks as though we might just get a little pullback and then stall out at 51. Cardano on the 4-hour, same kind of picture. We're trying to rally with a little bit of strength, but we may run into a little bit of overhead supply right here at 45 cents to 46. So just keep an eye on that. It looks as though we're just kind of trudging along a little bit to the upside. We're not getting much out of this. Anyway, again, stay in touch with me. You can go ahead and email me, brandonwendell.cmt@gmail.com. Hit me up on TraderBDub on Twitter. Make sure you follow me there. I post a lot of stuff pretty much every day. So until next time, trade safe, trade well, everybody. Take care. This is all for the Wendell Effect.